Hello folks, this is Raj Sastry from Raj Option Trading. Today I want to talk about my favorite medical device stocks. According to the Grandview research, a medical device manufacturer, market is expected to be around 176.7 billion in 2020, and it's going to grow at a CAGR of 5.0 percentage to reach 262.4 billion into 2028. So this is a very big market, and there are a lot of players in this market. What we want to do is we want to find out what are the top most companies in this area, and which companies are growing exponentially. So with that, I have a couple images here. There's a GenMark, their product here, InMode, they got their own device. ShockWave, they got their own device. All these companies are really doing very well. So let's look at my favorite companies in the medical device market. And here are my favorites. The one in bold. One is GenMark Diagnostics, Clearview, Quanterix, Shockwave, Inspire Medical, Alphatec, Align Technology, Vapotherm, Myomo, InMode, Adapt Health, Penumbra, AXGN, SIBONE, Bio-Rad, Abbott, Itamar, Profound, Insulet, Exonics, Zynex. So now let's see why I chose these companies and why they make sense. So with that, let's look at the complete list here. If you look at the list here, this list is organized by performance. So the top company here is highly performing in last 1 year, and it's in the descending order. And what I look for in these companies is really, one is performance. I want to make sure these companies are really performing very well. And I want to see the revenue growth. I want to see double-digit revenue growth. And I want to see good amount of cash on hand, and also good operating cash. And then I want to see a good gross margin. So three absolute things for me are: one is the performance has to be nice, revenue growth double digit, gross margin should be double digit. So with that, these are the companies that came through, and let's go into few companies in a little more detail and find out what they're doing and if you can invest in those companies. So with that, let's look at GenMark, GNMK. It's about 1.40 billion dollar company, and stock price is about $19, not too much. And the 75% approve CEO Scott Mandel. And this company here, they provide high value, simple to perform, clinically relevant multiplexed molecular tests. In simple terms, they basically help to diagnose, respiratory disease and things like COVID. They did very well during the COVID. They can also test the blood culture. They got various products in the market. And with that, if you look at their stock chart here, they've been doing pretty well. Even during the COVID March-April timeframe, they did very well because of their test here. And they got good amount of cash in hand and some debt which is manageable. And if you look at their market cap, they've been a little bit, I would say, up and down to some extent. They did extremely well, in during the COVID days, early days of COVID, because of their diagnostic tests. And now also they're doing, pretty okay. They're into 1.40 billion right now, which is a good appreciation. And these guys have got various future contracts which will give them the recurring revenue in coming years. So with that, the revenue itself, as you can see here, it's constantly going up: 38 million, 40 million, 42, 50. It's consistently revenue is improving, which is what we want to see in these companies. And there's a good year-over-year revenue growth. It's actually very good, 79%, 118, 103, 84, very nice. And they've been surprising the Wall Street with the revenue surprise. And on the EPS side, they've been they missed last time in the 12/31 earnings, but otherwise they've been consistently surprising the Wall Street with their earnings surprise. And nice gross margin. I would say it's not bad for a initial startup type company. And they're still not making money. They're losing money, so that's why net margin is negative. So with that, I would recommend this company for your portfolio. It's a low price and low market cap, and has plenty of room to grow in this medical device market. With that, I would recommend this company. Next is ClearPoint Neuro, CLPT. It's a smaller company. It's a $462.37 million company, and they're into minimally invasive surgical procedures in brain and heart. So it's a very niche market, as you can see here. And CEO is Joseph Michael Burnett, and stock price is about 22.42. And they got good amount of cash and some debt which is manageable. And if you look at the stock chart here, they've been consistently going up, and last 6 months or so they really did very well. And their market cap is consistently a little bit up and down here, but now they've been going up from 85. Now they're into 462, which is more than double, as you can see here. And from a revenue perspective, it's a good I would say steady eddy type revenue here. They've been surprising Wall Street with the revenue surprise, and they missed back in March. And EPS wise, they've been surprising Wall Street last 3 quarters. A very good gross margin, 79%, 74%, and net margin is negative, as you can see here. They're still losing money because these companies have to invest heavily into their R&D. With that, this is a good stock, pretty steady eddy type stock, small cap, has a lot of room to grow. Next is ShockWave. It's a S-Wave is the market is symbol, and about $4 billion company. 90% approved CEO here, and stock price is around 116. And these guys are into intravascular lithotripsy to treat complex calcified cardiovascular disease. So this is a very niche market, as you can see here. And these guys are market leader in this area. And stock price is really nicely making its way up, which is a good sign. And they got good amount of cash, very low debt, which is a very good sign. And from a market cap perspective, as you can see here, they've been improving the market cap consistently. And they're also improving the revenue year over year very nicely. And they've been surprising Wall Street with the revenue surprises. On the EPS side, this company is a little bit hit and miss, as you can see here. They surprised negatively by 1 cent and surprised positively and then negatively. So a little bit hit and miss, but what we like to see is really on the revenue side, they've been surprising consistently. And very nice gross margin, 73, 65, 62, and they're still losing money, as you can see here, because these companies have to invest heavily into their own product and research and development. So with that, I would recommend this stock. I've been watching this stock for a long time. It's a very good company to invest in. Let's look at next 3 companies here. Next is InMode, ticker symbol INMD, about $2.63 billion company, and 72% approve the CEO here, Moshe Mizari. It's Israel-based company, and stock price is about 68.96. And these guys are into minimally invasive aesthetic medical products. And they take care of things like hair damage, wrinkle reduction, and various these aesthetic type procedures. And this company is really nice. They're doing really good job. They got good amount of cash, very low debt. Stock price is around 68.96, And if you look at the market cap here, they've been steadily, increasing the market cap. This tells me they're really grabbing the market share. And on the revenue side, they've been consistently, a little bit hit and miss in the beginning, but now they've been improving the revenue. They're accelerating the revenue and good year-over-year revenue growth. And they've been surprising Wall Street with the revenue surprises, and they've been surprising on the EPS side for most part, with the exception of 331 March quarter. Very, very nice gross margin. I would like to see this 85%, 84%. It's like, SaaS companies, right? I mean, this is, not a SaaS company, but still very good gross margin, and they're making money, positive net margin. So with that, very nice stock chart. I like the way the stock is performing. This is a keeper. I would invest in this company. Next is Quant Risk. This is into ultra sensitive digital immuno assay platform. They basically look at previously undetectable proteins. This is a very good area, and it's about $2.41 billion company. 70% approved CEO here, and stock price is around $75. Good amount of cash and not too much debt. Stock price is, stock chart is doing very well. Consistent, steady Eddie type stock here. And from a market cap perspective, as you can see here, initially they had a little bit hiccup here, came down a little bit, but now they've been doing very nicely. 775 million in June, 1.06 billion in September. Now they're 2.41 billion. So very good acceleration. So this is really means they're grabbing the market share. And from a revenue perspective, they've been steadily increasing the revenue from 13 to 31. So it's a good acceleration here. And they've been surprising the Wall Street with the revenue surprises, also EPS surprises, both positive surprise, and good gross margin, not as good as InMode, but still good gross margin. And they're making money here. They just turned positive here from a net margin, which is a good sign. So I would recommend this company. Small market cap, and lot of room to grow. Next is Inspire Medical, INSP, about $6.32 billion company. And these guys are into minimally invasive solutions for patients with obstructive sleep apnea. And these guys are into the 100% of the employees approve the CO here, and stock price is a little higher, 232.79. But company's got a lot of room to grow. Very nice stock chart, as you can see here, consistent, steady Eddie, and good amount of cash on hand, some debt which is completely manageable. And from a market cap perspective, these guys are really growing very well. March 1.47, then in June 2.33, consistently growing up. That means they are taking the market share and doing really well. From a revenue perspective, again, same story here. A little bit hiccup in the beginning, but now they're doing really well. Very good acceleration when it comes to year-over-year revenue. Revenue surprise all along. And EPS wise, they've been surprised. They surprised positively 3 times and negatively once. And great gross margin. I would like to see this 85% gross margin, just like InMode. These guys are really doing well, and they're still not making money at the end of the day. That's why net margin is negative. They are investing in their own R&D and technology. With that, I would recommend this stock for your portfolio. Very nice stock. Next, let's look at 3 more companies here. Next is Exonics Modulation, about $1.99 billion company. And these guys are into sacral neuro modulation solutions. They help with the overactive bladder, fecal incontinence, urinary retention. This is one of the symptoms many people get into, and 89% approved CEO here, and stock price is around $50.31, so which is a low stock price, and also market cap is a little low. A lot of room to grow. and they got around $241.18 million and of cash and low debt. And nice stock chart, as you can see here, very nice stock chart. Some bumps along the way, but they always bounced back. And from a market cap perspective, they've been doing very well. A little bit hiccup in the beginning, but now they've been doing very well. And pretty steady Eddie type stock. This stock has got its moments, as you can see here. I would wait when it comes down. I would buy. And from a revenue perspective, they've been doing well. It's got some bumps along the way, as you can see here, very well represented by even the stock chart. You can kind of read through. And they've been surprising on the revenue side, with the exception of latest quarter back in September, negative surprise. EPS wise, they've been positive all along, and 61% gross margin in the latest quarter, and they're still losing money. So with this stock, I would buy when it's down a little bit. So it's one of those stocks. It's got its own moments in the chart, and even if you look at the revenue, it's got bumps along the way. I would buy when it's a little bit down and keep it. Next is Alphatec, ATEC, about $1.99 billion company. These guys are into spinal fusion technology for treatment of spinal disorders. Spinal disorder is one of the common, cause of many people of, in throughout the world. 77% approve the CEO here, Pat Miles, and stock price is around 50.31, which is so not huge. They got good amount of cash and also good amount of debt, which is I would like to see debt a little bit reduced, but let's see how it goes. And from a stock chart perspective, very nice stock chart. Stock is accelerating nicely with the one or two bumps along the way. From a market cap perspective, they are kind of steady eddy. There are some bumps along the way here in the beginning, 435 to 218, which is a almost half. They took a haircut here. From a revenue perspective, they've been up and down a little bit, and good year-over-year revenue. And they've been surprising Wall Street with a positive surprise on the revenue side, and EPS side they've surprised positively last two times and negatively previous two times. Good gross margin, and net margin is negative. They're still investing in their own company. I would because this stock has its moments, I would wait for a pullback and then you invest, because as you can see from revenue here, they are a little bit up and down all along the map. So I would wait for a little bit pullback, then I would invest. Next is Profound Medical. So it's a smaller company, as you can see here, $440.7 million company based in Canada. Stock price is around 22.03, and these guys are into you know, ultrasound technology, incision-free ablation, of diseased tissue. These guys are into really, non-invasive type solution here. And stock chart is pretty steady eddy, as you can see here. And they got good amount of cash, no debt. And if you look at the market cap here, consistently growing. It's a smaller market cap company. As you can see here, quarter by quarter, they're increasing their market cap slowly but surely. And now they're at 440. This really shows this company, it's not a rocket type company that shoots higher, but slowly makes its way up. And from a revenue perspective, they've been increasing the revenue year over year, surprising Wall Street on the revenue front. On the EPS front, they surprised on the negative side last two times, but they're still on the revenue side they're positive. Gross margin is very nice. They're still losing money. That's why net margin is negative. I would, this is a smaller company. I would buy this and keep it, especially because it's a steady eddy. They're been, slowly but surely growing their market cap. So I would invest in this company. So with that, now let's look at, some of the performance itself of these companies and see why they make sense. So the way to read this chart is I got on the top, I got all the ticker symbols of these companies that we talked about, and the ones with the green background are my favorites. And then I got the stock price, the current stock price, and what the, how much below the 52-week high they are right now. That's indicated here. So with that, if you look at the my favorite stock, GenMark here, right now it's at $18, and they're 20% below the 52-week high. So it's something you're not buying at a top, so you can really buy at this point. And if you look at the stock appreciation monthly basis, they have their moments here, as you can see here: 24% down, 27% down, 13% down. Now they're steadily going up. So I would buy this stock because as you can see here, they're 20% down from top. Stock price is at 18.8%, $18.8, which is not too high. And CLPT, this is as you can see here, it's a low dollar price stock, $21, and same story here, pretty steady Eddie. I would invest in this too. So you can just read through this, as most of these companies are really a little bit off their 52-week high. So that makes it really good to invest. You're not buying at the top of the range. And some companies like Abiomed, ABMD, it's also my favorite, but the only reason I did not choose is really, I think it's the revenue. The revenue was not too much from a year over year revenue perspective. So with that, let's look at next set of companies here. Same story. We have BIO 15% off. Not bad. We got Abbott Labs. This is one of the steady Eddie companies. So I would invest in this for long haul. They're really doing very well. QTRX is okay. I mean, they're a little bit all over the map, but it's a good company. I like it. Then we got ITMR, which is good. PROF, Profound, we talked about this. It's a good company, and 25% off of their 52-week high. Insulet or Pod, it's again a great company. And AXNX is again a good company. ZYXI, same story. This BRKR is also a very good company. I think they had a little bit miss on year over year revenue. That's why I did not select this. So with that, let's look at weekly, monthly, quarterly performance, and take it from there. So this is a last slide, conclusion slide. The stocks which are highlighted in bold are my favorites. I would also watch a little bit. As you can see here, GenMark, $18 stock. There is a high short ratio, 10.33 float short. So I would watch out. It's good to buy. Again, they are 20% off their high. Because there is a short ratio, you can expect you can expect some sort of short squeeze. I feel like this is already unwound for most part. 10% is not too high, but I would watch out. It's a good company. And as you run through this here, Vapotherm, same story. They got 10% short ratio here. I would, because stock price is low, they're 57% off of their high. I would invest. I would not worry about 10%. MYO, same story, 11% short. Short ratio 36.44% off the 52-week high. No biggie. SmileDirect, SmileDirect is a interesting company. When these guys came public, like maybe year or year and a half ago, everybody thought these guys are going to give their money for run for companies like Align Technologies, but these guys really did not do that great. As you can see, a very high short ratio, and they're 26% off the high. I would, because stock price is very low, I feel comfortable, if you want to speculate and buy a little bit and wait for some short squeeze. Same story on the Exonics Modulation, $50 stock, 13% short ratio, and 13% off their 52-week high. So not a big deal. I would not worry too much about 13%. You could see some short squeeze here also. Zynex, this is one thing that very high short ratio. They're 14%, 41% off of 52-week high. Stock price is also low. So because it is already 41% off of high, I would not worry, but something to watch out for, high short ratio. So with that, these the ones highlighted in bold are my favorites, and I would recommend many of these for your portfolio. And we didn't talk about Align. Align is also my favorite. It's a very steady eddy. They're into dental, technologies, make your smile look much better. So with that, thank you very much. Happy investing.